Hey guys, welcome back to Sky Talks Trading. My name is Sky and I'm on a quest to invest. And today's video is all about Baba stock, Alibaba. So Baba stock has definitely been on a downtrend for nearly a year now, even though the company looks well positioned for double-digit revenue growth in the coming years. Baba stock is kind of seen as a risky investment by a lot of people, even though many of the risks that Alibaba are facing, they're not new. Oh, by the way, I'm not a financial advisor. This is just my opinions only. When it comes to short-term, Alibaba's short-term price action will definitely remain a little bit unstable, unpredictable, but over a long enough period of time, that's why I say patient investors, revenue growth will prove more important than multiple expansions when determining the value of a stock, even emerging market stocks. To be honest, all the experts can agree that this stock is going up, that it's a great investment. Sadly, the market hasn't been reading their analysis. So the stock keeps going down. I've heard people saying that it's a risky investment, and Chinese stocks in general are kind of seen as risky. And the reason they give is that, they can list a number of companies, mostly American, that will likely outperform the S&P 500 by a mile over the next 5 years. And they don't come with the same level of political risk that Chinese companies do. They think that stocks like Baba will need to nearly triple in share price over the next 5 years to justify the risk involved. So the Baba stock price has fluctuated between $143.34 and $148.45 throughout the most recent trading session, with the volume trading being 20 million shares, which is actually kind of low when you compare it to the 3 months average volume of 25 million shares. The 52-week high for Alibaba shares is $319.32. The company currently has a 17.09 PE ratio and a price target of $256.26. When it comes to short interest, we're actually seeing an increase in the short interest, definitely compared to the previous month. As of today, there are 44.52 million shares being shorted, which translates into 2.64 of a short ratio for Baba. But yeah, back to long-term growth for Alibaba. With 34% revenue growth in the most recent quarter, Alibaba definitely looks well positioned to continue growing revenue for a long time. China's GDP is expected to grow at a CAGR above 5% through 2026, whereas the USA's will be below 2%. And Alibaba is actually the leader in China's cloud computing market. China's cloud market is 10.8% the size of the USA's and has a 5-year CAGR of 61% compared to 24% in the USA. CAGR stands for Compound Annual Growth Rate. Alibaba has global ambitions to deliver often very cheap products anywhere in the world within 72 hours. I love that. China's e-commerce sector is forecasted to grow at 6.65% through 2025. As a market leader with fast-growing horizontals, including fintech, Alibaba will likely grow faster than this, I think. And Alibaba's revenue CAGR is projected by analysts to be above 24% for the next 3 years. So it's worth pointing out that all of these growth drivers are still intact despite the CCP's crackdown, which is something that people are mainly worried about when it comes to Baba stock. I'm not saying that Baba stock isn't risky to some degree. I just think it's being maybe over-exaggerated. Investing in emerging markets always comes with, inherent unique risks. Depending on the market, investors are more likely to encounter issues like hyperinflation, exchange rate fluctuations, unpredictable regulation, lower liquidity, maybe even fraud, more frequent bankruptcies, and this has always been the case, but it hasn't stopped strong performance from emerging markets in the past. Morgan Stanley actually recommends an allocation towards emerging markets of at least 13%, but perhaps materially more, up to 39%, based on modern portfolio theory. The firm expects emerging markets to outperform developed markets in the coming decade. So that's definitely something to consider. That's my take on Baba stock. Let me know what you think in the comment section below. Just something else I want to touch on. So Robert Kiyosaki has predicted that, and I quote, the biggest crash in world history will hit in October, so this month. If you don't know Robert Kiyosaki, you probably do. He's the author of Rich Dad, Poor Dad, and he is predicting this major crash because of the looming default of Evergrande, which is the second largest property developer in China, and it continues to send bad vibes across the global markets, making people pretty nervous. Also, in his tweet last week, he said, "House of cards coming down, real estate crashing with stock market. China's Evergrande Group cannot pay. Valuation of properties fake. Will real estate crash spread to US? Yes." But it's not all doom and gloom. He did provide some suggestions on how to prepare for this period of time. You know, so he's not just like talking about problems, he's also bringing some solutions. The first of which is gold, actually, which is a pretty simple recommendation. For centuries, gold has been the go-to safe haven asset. You know, it can't be printed out of thin air, and its value is pretty much, for the most part, unaffected by economic events around the world. For instance, in the first 6 months of 2020, when the stock market went on its roller coaster ride due to the pandemic, increasing demand for gold drove its price from $1,509 to $1,772 an ounce. So the most direct way to pay for gold is to own bullion. That method can be difficult and also more expensive. So obviously an easier method is to invest in large gold mining companies. Some companies like Barrick Gold, Newmount, and Freeport McMoran. Also silver, a lot like gold. Just a different color, really, isn't it? You know, it seems less exciting, but it can still be highly effective when it comes to holding during times of uncertainty. Over the past 2 years, the price of silver has actually increased by more than 30%. And the third solution is Bitcoin, which I'm happy to see. You know, it was once considered very niche, but obviously now it's super mainstream. I'm sure you know how to buy Bitcoin. I'm probably guessing if you listen to this, you probably own some Bitcoin. But, you know, this isn't for sure. I think these are solid investments anyway, regardless of any big crash coming. So guys, that's it for today. Thank you so much for listening and watching, and have a great day, and I'll talk to you soon.